Another thing that can cause inflation is when there's limited product availability. And one of the things that is really dragging out here with inflation that's not going away yet, one of the more stubborn things that's sort of lagging around is food price inflation. And here's a few comments on why food prices are still rising. And there was many other reasons, but the main ones were the pandemic disruptions, the war in Ukraine, and sanctions on Russia. The pandemic disrupted nearly every part of the food supply chain, including production, processing, and retail. Those effects on the food supply chain are still being felt today. Food production costs also increased due to labor turnover, investments to protect products from contamination, and additional worker training costs. Even the cost of transportation of food to processors and grocery stores increased as retailers placed rush orders to keep shelves stocked. And between Russia and Ukraine, there's a third of the world's wheat supply right there. So what happened from before the war till after the war started? Cargo exports of wheat from Ukraine decreased 92%, according to S&P Global Market Intelligence. Short supply means the price of wheat is much higher, making it more expensive to process key ingredients such as flour and starch. In turn, food producers must increase the price they charge consumers to make up for their higher production costs. And sanctions on Russia. Western countries have implemented bans on Russian imports, including oil and gas, and that resulted in energy prices rising 23.8% from August 2021 to August 2022. But food production is all about fertilizer, potash. Soaring fertilizer costs also contribute to food price increases. Prices in some areas increased by more than 300% before the war in Ukraine, according to the American Farm Bureau Federation. Look, when the government is attempting to control inflation by encouraging or discouraging spending and investing, imagine what they're going to be able to do now with a digital currency. So you got $100 in your account, but tomorrow they could say it'll be 99. The day after that it's 98. The day after that it's 97, and so on. So what do? You say, I'm going to take whatever money I got now. I'm going to go out and buy a big screen TV I've been looking at for $100. It's logical to go out and spend money when you wouldn't have otherwise done that. You might have been saving up. You might not be able to afford the TV that you want yet. But the money is melting. You got to go out and spend it. And the powers that be and the politicians say, there you go. We're heating up the economy. But here's where I differ from mainstream economists. I would argue that they didn't heat up the economy at all. All they've really done is pushed a bunch of purchases forward. And now this guy doesn't have any money to buy anything else. It wasn't economic activity. It wasn't heat. It was just forced, artificial activity. And what did I tell you 100 times now? Artificial is temporary. The point is, they'll have thousands of options of stuff to do, and there will always be a politician who thinks that it's a good idea to do some of those things. It'll be death by 1,000 cuts. They're going to make a bunch of changes, just like they did to the tax code, and look at it now. So let's skip ahead here. Digital currency. And you say, oh, I've got a negative interest rate. I got to rush out and spend this money. And I'm just using negative interest rates as one example of hundreds that there may be. I don't think we're going to negative interest rates anytime soon. I'm just using it as an example. So the money in your account is melting. So you say it's logical to go out and spend the money before it becomes any less valuable. So you go out to buy a used car, the prices of which are coming down pretty strongly now, just so you know, but I don't want to get off track here. So you're going to buy a used car as your money is deteriorating in value in this example. And you go to buy the car and they say, sorry, we can't sell you this car because you have to renew your driver's license. And it's not the dealer, not the salesman saying that. It's not the business, it's the actual government. That's the point. They're going to do stuff like this. So you say, I'll go renew my license. So you go to renew your license and they say, okay, well, we can't renew your license because you have to first pay all these unpaid parking tickets. And I think they kind of do that already, but I'm saying the difference. What I'm saying is that this will be the government. That's the important point. The government, whoever is in the office for that brief window of time, they'll make decisions they think are best, and they'll have unlimited capability of what they can do. Another thing that's going to pull inflation lower is if the economy declines, as it will as we roll into recession, but also overall, worldwide. You're seeing, this is from the IMF, the International Monetary Fund, the World Economic Outlook, and you can see here's some countries that are in recession right now, and you can see the expected growth rates according to the IMF, and there will be more recessions here next, and here after that. So the big inflationary bounce. There's a lot of US dollars held by other countries all overseas. They keep these dollars because you have to pay back American taxes in US dollars, or if you want to buy something from America, or if you use them in FX trades. Sometimes they hold it because it's a stable asset. It's believed to be holding its value well. Or if you want to buy oil, it used to be that you have to have American dollars. And if you're not required to buy oil in US dollars anymore, you don't need to keep as many US dollars in your coffers. And as it goes, when you have extra money sitting somewhere, you eventually will spend it on something or move it or use it in some way. However you look at it, that money will eventually start making its way back to our shores. It gets released into the wild, and then eventually it's in America. This is from Reuters. Pakistan paid in Chinese currency for discounted Russian oil. Are you guys seeing how the tides are all moving now? Are you guys getting it? This is from Insider. The average cost of Russian crude shipments was $68 a barrel, according to data from India's Ministry of Commerce, marking the lowest price tag on Russian crude since the nation first invaded Ukraine. But there's a lot of confusion about all the different types of inflation and all the different ways that they look at inflation. But the one that really matters to you is when you go to the grocery store and you pick up something off the shelf and that price shocks you. Or you pull up with your cart and the entire amount of all the groceries you bought, each one was a little bit of a death by 1,000 cuts. That's a bit expensive. You go up to the cash register and they don't even have cashiers anymore in most of these places. But at the end of the day, you get your bill and it just shocks you how much greater it is. That's the type of inflation that I think that we should be talking about. And we've even had some of the early bankruptcies that I'm expecting. These are the earliest ones. And you might say the stocks have been doing okay lately. They've been holding their own. But if you look at the moves in the markets, it's mostly driven by a few big name companies. A lot of these FANG stocks, Apple, Alphabet, they're the ones that are benefiting, while overall most stocks are trading lower. There's a lot of companies that are not bankrupt right now, but 6 months from now they will be bankrupt. As you know, I expect inflation to still come down between now and the pivot point that I'm talking about. But I do believe that all these broad-based economic hardships, while we have them, will be an anti-inflationary force. People will spend less money. People will find ways to not go out to restaurants, not buy that extra thing. The literal problem is the operating deficit of the country. Every month, we're spending more money than we're creating. As long as there's an operating deficit, we will always have debt ceiling debates and crisis coming up in the future. As soon as you operate at a surplus, you create more money than you're spending, then you can start cutting away at the debt and getting back on an economically sound footing. The good news is that there are things you can do to preserve your wealth, avoid risks, take advantage of opportunities. That's what this channel is about. This channel is about you, your wealth, your opportunities. What moves are you going to make? How are you going to understand the economy? And as I'm going to tell you all the things I'm doing, the choices and decisions I've made for my own personal investments, I'm going to say you got to make your own decisions and live with the results of those decisions. I'm not telling you what to do. I'm telling you what I'm doing. I expect the US dollar to decline in value a lot. I expect the results of that will be an increase in the price of gold itself. Gold is also nature's insurance and a flight to safety in case a war breaks out, which there are a couple of big ones right now and soon to be bigger. And as a result of the increased gold prices, I believe that the profit margins of the best gold mining companies will absolutely explode. Gold prices could go up 10%, and the profit margins of a company could go up 100% on the same exact move. So I myself have bought a lot of silver mining companies, gold mining companies, and I own a lot of the physical precious metals as well. Get some of those if you want to, because now's the time to do it. Sometimes it's very difficult to get gold or silver when you want it. What I did is I leaned towards safer, more stable industries, away from this highly speculative stuff. Get into things like casket makers, funeral home companies, rendering plants, boring stuff that just consistently spits out money. Dividend paying utility companies, oil companies, companies related to oil prices going a lot higher, because we're getting closer to the end here. I told you guys on the global oil clock that I made, we've got just over 40 years left of oil at the current extraction rates, usage rates. We're going through 85 million barrels of oil a day. And as we approach the time when there's not a lot of oil left, there's going to be a lot of oil-related wars. There's already a bunch setting up right now. There'll be more obviously known oil wars. So a lot of dividend-paying oil companies, I think, would be a good way to invest right now, in my opinion. This is not personalized trading advice.